who has 100% of the information, someone who's having a lot of fun, helping a lot of people. You're all excited about the BYOB cash out strategy. This individual is a master of finance with a financial degree, a financial advisor, a U.S. Army major retired, a mother, grandmother, a coach and mentor of the BYOB movement. We call her the trade whisperer. Ladies and gentlemen, Miss Tasha M. Dyer. Miss Dyer, are you on the call?
Yes, I am. And ladies and gentlemen, I just want to thank Love. Just give me a moment to thank him. And he is definitely someone that's here in this Jacksonville market. He is definitely someone who is integral to this movement, the BYOB. So when you join us this weekend in Tallahassee, you will definitely be hearing from him as well. So Love, I just want to thank you for what you do. Thank you for hosting the call today. So as I begin to share my screen, I'm going to share my screen. I want everyone, as you're joining us this evening, this is a Tuesday night Power Pack Tuesday. This is about tools training. That's what tonight is all about. And so while we're understanding the tools training, I want you to start with getting your mindset right. I just want you to start with getting your mindset right. And how we do that is through your affirmations. Right? How we do that is making sure that you affirm and you're sitting down with the right mentality, the right thought process, right? And so I want everyone to begin with, I am a master trader, all my trades and in profit, right? You have to believe that thing. You know, when you got enrolled, what you were looking for was something different. You were looking to be on the other side of money. You were excited and you were happy about someone sharing some information with you that was been hidden in plain sight. Somebody sharing some information with you that has literally been hidden in plain sight. We walk around and this information is all around us. And so we don't know about it until somebody tells us. And so you have to make sure that you affirm that. You have to make sure that you speak it. You make sure you believe it, because that's how you're going to increase your account. That you have to increase your account, and that's how you do it. And that's what we do, and that's how it's done. So that's where I want to start. Now, tonight is training. And we took some very, very good trades today, right? We had some great trades. And what those trades did is they allowed us to be put into a position of profit, right? Those trades actually, we did very well with those trades today. And so I want you to understand, how did all of them hit? If you took profit this morning, right? And I'm going to talk to you about what the BYOB cash out is. But if you took profit this morning and you took, I saw 177 pips. I saw, just pips, raining pips all over the place. And so if you were actually able to take profit on that, let me get a 777 in the chat. You're with us at, yes, Pip City at 5 a.m. And if you're with us at 9 a.m. and you were actually able to catch those pips, let's keep those 777s coming. And then what I loved even more is the fact that you all kept it moving. You guys kept going. You know, you kept trading. It was just beautiful to see that you actually kept the trading. So you're not looking for a signal, you have become the signal. And that's what Be Your Own Bank is all about. So when you accept the challenge to be your own bank, you're accepting the challenge to think like a bank, act like a bank, so you could become your own bank. So awesome, you didn't, right, but see, you took something and you did it on your own. That's what I'm talking about. That's what this is all about. And how do we do that? That's what tonight's training is all about. But first thing first is I'm gonna start on a 15-minute chart, because if this is your first time joining us this evening, if this is your first time on a call, let me get a 111 in the chat. Your first time. If you are not trading on your own yet, but it's not your first time on a call, let me get a 222 in the chat. Let me get a 111 and a 222. So you're still learning. You've been on a call, but you're still learning is the 222. The 111 is, it's my first time. So I want to welcome each and every last one of you all to the call. This is your first time, welcome to the BYOB Cash Out. And I'm gonna show you exactly how we cash out, you know, and explain to you why it's built on that 15-minute time frame. Now, for those of you all who are still learning, I need you and who are, let me say, not actively trading on your own, right? Without sitting in a group or on the calls, you know, able to analyze it and take it for yourself. That's what that 222 is. But I'm going to challenge you all tonight. I'm going to challenge you. And I'm going to challenge you because I need you all in a demo account. Get a demo account with a broker that you're going to use. Get a demo account. And when you get that demo account, I'm going to challenge you to get in the market. This was what demo is all about. Before football season, you have preseason, right? Same rules, same game, but you're actually not in the market yet. You're in the market, but it's not your money that you're in the market with. So same thing. You learn how to swim. You can't learn how to swim watching other people swim. You can't learn how to swim on the sideline. You'll know all the rules. You know everything. But guess what? You're not going to get it until you get in the water. And that's why we start with those affirmations. That's why we begin with those affirmations for you to, I am a master trader. All my trades end in profit. You have to believe it in your heart first, right? Believe it in your heart first. And when you believe that in your heart, then you'll sit down with a different level. This is not difficult. It's just different, right? It's not difficult, it's just different. And so the more and more you actually begin to play with the charts, learn the charts talk to you. You need to have a relationship with the charts, a relationship with the pips, right? So I'm gonna let Pastor Axon know that yes, that's where that came from. So next time is gonna be mine. But you have to have a relationship with the pips. And so that's what this is all about. And you do that by getting in the market, and the market talks to you. You have to listen to the market. You do not force a trade, but you have to begin to get in there and get comfortable. So what we're doing tonight has been building. So if this is your first time on, there is a playlist on BYOB Challenge, the YouTube channel. There is a playlist at BYOB Challenge, and it's called Market Analysis, Market Structure, I believe. So you want to go watch those because tonight you're going to see me drawing support and resistance lines. Tonight you're going to see me doing some of that stuff, but you need to know how to do it. You need to know so you can actually, because I get what's my take profit? What's take profit? Well, take profit is your support and resistance line. And how many of us hit today? How many of us hit all those take profits, rain and pips, right? So you definitely want to make sure that you get it and you understand, and so you can build off of it. But while you're learning, right? While you're learning, and this is where the strategy begins. So, and now they are upgrading. I saw the web analyzer Facebook group, the name has actually been changed. So understand, you know, on one browser, I don't get this. On another browser, I get the calls. But that's okay. And because we're just going to work through it, and that's perfectly fine. But what I want to show you is that in this blank spot, if you all have the web analyzer, you know that the web analyzer calls trades. They'll give you, it's not that they're calling a trade to take right then. They're going to give you what's called an entry trigger. Now, entry triggers come from, when you get an entry trigger, you want to make sure it's within an area of value. Your area of value, exactly, and that's expected. That's expected. So thank you for that, Jeff. So your areas of value are when I'm looking at my support and resistance lines, I'm looking at my trend lines, and I'm looking at my moving averages. So what you're doing when you begin trading is you learning, you're going through the academy, you're marking up charts. That's what you're doing, right? You're learning how to get a feel for that. But while you're learning that, right, understand that what the BYOB cash out is just those three simple things. It's looking at those area of values. So first, I'm going to start with my stochastic. So no matter if I type this currency pair in like you saw me do, or you get a call from the web analyzer, right? Then what's going to happen is I'm looking for my momentum to start. I'm looking for momentum around the 80 or around the 20. So if momentum is around the 80, right? That's another 777. That means you are in profit. So and if that momentum is around that 20, that's going to determine the direction that I'm looking for. That's going to determine the direction that I'm moving. So here I am around the 80. This determines if I take a sell. So I need that blue line to cross over the red in a downward motion. If I'm around that 20, I need this to cross over around the 20, that blue line cross over the red, right? Blue line cross over the red and upward momentum. And that's when I actually activate that trade, right? That's when that trade is actually activated. Now, what you're seeing is this actually was some consolidation right there, but let me see if I can find a different one, because you'll understand we did higher analysis on that. So, and you always hear me say I don't trade out of consolidation. So I want to stick to that. And I want to show you guys a valid trade. So let's just look at another one. And this on the out, let's go here. I've got all this stuff marked up for you guys, ready for training tonight. But I want to show you all the BYOB cash out. So all of these did the same thing, right? Let's see. So now what we're looking at, and this one is getting ready. So what we're looking for, that was just a strong uptrend. And you'll see that GBP has been in a really, really strong uptrend. So what you're looking for is my stochastic, the blue line crossed over the red. And you see, right, you see it goes down. Yeah, this one wasn't strong because we've been in a strong up. Let me go to a different currency. Right, let me go, here we go. So first thing first is I'm looking for my blue line to cross over the red. Blue line to cross over the red in an upward momentum around that 80. That's what I'm looking for a buy. The second thing, now understand the stochastic is always first. My stochastic is always first, right? And so once you get that, and then now these other two confirmations do not have to be in order. Most of the time, you will get your green candle or red candle first. Hikanashi candles are trend candles, right? They're trend candles. So understand that if I change it to a Japanese candle, it's going to look a lot different. So the green candles are Hikanashi candles. These are these green and red candles. Now you see I got a green candle with a flat bottom. I need a flat bottom on these candles. On the red candles, I need a flat top when I'm analyzing them. So once I have my stochastic with that curve in it, the next thing I'm doing is I'm looking for those Hikanashi candles. Now, as I just stated, most of the time the Hikanashi candles come first. But sometimes, as is in this situation, look, my PSR flipped first. But when my PSR flipped, I didn't have a green candle with a flat bottom. So this is just one. I say it all the time, and we never actually got one, right? So now we actually have one where the PSR flipped before the candle came. Most of the time, you're going to have a candle first. And I'm glad this just happened, because now what you're looking at is going to identify another question, is about the candle closing. Now, granted, each one of these candles is 15 minutes. However, you just saw a solid candle form, right? That candle formed with that flat bottom. It formed with that flat bottom, and what's going to happen is it's either going to stay there or it's going to push a little bit more. And so you have the stochastic that curved over the red line, that crossed over the red line in the upward momentum. You see that gap in the stochastic, that means that's moving away from that signal line. That means that's strong. I have my green candle with a flat bottom. So I have a strong, look at that candle, how nice and fat it is, right? It's not looking weak like this one. So I have a nice, strong Hikanashi candle. When my PSR flip on the 15-minute chart, you're looking for 10 pips and cash out, right? Yeah, it's nice and chunky, right? So it's still moving. So, but you're looking for 10 pips and cash out. But on the 5-minute, we'll go over that as I'm going through training. But just understand that's what the BYOB cash out is. And it's just that simple, market execution. Now, what about a stop loss? Stop loss is below the PSR, right? You notice, oh, great. Don't get to show you. We're having all kind of stuff tonight that I hardly ever get to show you. So look at that right there. So my stop loss goes outside of the PSR for For a buy, it goes below. If this was a sale, it'll go above. Now, this is why. This is the why. Look at how it will touch the PSAR, right? Just like you will touch a support and resistance line. This is that reversal. A PSAR is a reversal in the market. And so that's what happens if we bounce off a support and resistance line. It reverses. So just imagine you got a support and resistance line moving with you. So as long as I'm in that downward trend and that downward momentum, my PSAR stays on top. When it reverses, when it flips, it's on the bottom. But look right here. Okay, it actually touches the PSAR, but it does not go outside of the PSAR, right? It does not go outside of the PSAR. So when I do my stop loss, I don't want my stop loss in here. I want my stop loss on the outside of it. I want my stop loss on the outside of it. And that's how you cash out. That's how you cash out. I always do market execution, and then I modify for my take profit and my stop loss. That's how you cash out. Now, going back to, and I'm going to use this example. I'm going to use this one because y'all made some good money on this today, right? We made some good money on this today. So understand, and I'm going to jump to the hour. I'm going to jump to the hour on this. Now you have something called with the time frames, right? With the time frames, you definitely have something to help you do that entry point. So I just gave you, yes, it was. I just gave you a currency. Wait, let me answer this question. Yes, I am saying that. The stronger the PSAR is away from the candles, the stronger the trend. I'm definitely saying that. So just like this is strong. And you'll understand in just a minute why it's bouncing off of this resistance line. Excuse me. So now, what you saw, I'm on the hour, and you saw this moving up, right? You saw it moving up. So today from this call, right, that was 114 pips, right? It was 114 pips. So, and we marked up our support and resistance lines. We did all of that. But how do we do it? So when this PSAR flipped, right, you can literally jump in a trade, but you have something called market correction. You have something called market correction. Yep, 114 pips on one currency pair. You have something called market correction. So understand that if I just jump into this trade, right? If I just jump into this trade, what's going to happen is I'm going to have some significant pullback. And sometimes that pullback can be so great, depending on your account balance, it can knock you out. Or so you don't want to just jump in a trade. Even if I'm on a 15-minute chart, when you see me trading this, right, even on a 15-minute chart, you'll often see, let me jump back down to the 15-minute. So we were looking at this. You'll often see me drop down and drop up. What I'm looking for is multiple time frame confluence, okay? So I don't want to trade against what's happening. So yes, with the BYOB cash out, while you're learning it, you can do your 3 confirmations and cash out. However, you can take this to the next level. You can begin analyzing. Your eyes are getting better. You're seeing things a little bit more. You're getting a little bit clearer. You want to increase your accuracy rate because 92% is good. So 3 confirmations, 92% has been back tested, right? I'm not just making a number up. So this definitely has been back tested, right? But how do you want to increase that, right? You want to increase that or things like that. So we can definitely take extra steps to do that. And so multiple time frame confluence is definitely something that can help you with that. And it's something that you can do it. And when you're doing that, you kind of want to look to the before, what's feeding into it, and you want to look at where it's going. Okay, and you use something like a factor of 4. So if I'm on the 15-minute chart, you see me jump to the hour chart. And I look to the one before it. If I'm on the 5-minute chart, I want to look at the 30-minute chart. If I'm on the 1-hour chart, I want to look at the 4-hour chart. You see that factor of 4? 1 times 4, right? 1 times 4, 4, right? So that's why I want to look at that chart. So let me see, because this thing is all over the place. So yes, your eyes will definitely train you. So you will definitely begin to understand, you'll definitely begin to see what's happening and what's going on, and your eyes will begin to train you. And so I'm always going to recommend when you're starting, and for those of you who haven't been training but have been on the calls, I definitely want you to get a demo account. And y'all been very talkative and active in the chat. So drop in a demo account. Drop it in there. I activated my demo account, right? I want you to put it in the chat. I activated my demo account. Hold yourself accountable. Hold each other accountable. Because when we say I'm a master trader, all my trades in profit, it's not just for talk, right? It's not just for talk. It's for action. So when you create, if you have not done so, create your demo account when this call is done, so you can start trading in the morning. You can start playing around. You can start practicing. You can start getting in there. And so that's what I want to happen. I want to see, if you haven't done it, I want to see it in a Telegram group that you have done it. You've attached a broker demo account to it. So, but what I'm talking about with multiple time frame confluence. So if I'm on a 15-minute chart, and so let's look at the one that we were just looking at, right? So yeah, and that's good too. So, and I have demo accounts as well, even though I'm training, teaching, right? Somebody drop the Telegram in the chat? That would be great. And because if I start doing something different, or if I'm testing something, I don't want to do that in my live account. I want to do that in a demo account, right? So you always should have a demo account. Now, thank you so much. So right here, I'm gonna drop a line right here. We're talking about multiple time frame confluence. This is where this activated, right? This is where we activated this trade. So if I want to go look at the 1 hour time frame, what's happening on the 1 hour time frame? On the 1 hour time frame, it's starting to, I got that curve, right? Let me move this to the side so you can see it. I might just delete that and I'm gonna have to go back and I'm gonna put an arrow there, because a line actually covers it up, and we don't want that. We definitely don't want that. So let's put an arrow there, right? So now that we have that, I want to come here, and what do I see? I see that I was in an uptrend, right? And I got some reversal, right? I got some reversal. So this is why I'm quite sure some of you all took that trade. But knowing how strong that uptrend is, do you want to take that trade, right? So there are different factors that you want to consider. Let's see, did you all take profit? Because I know you all took that. So you actually did take profit. See, you were in a nice uptrend, and normally when I say, hey, I got a nice uptrend, I'm not going to take a market correction. Or sometimes we tried to take one the other day, but look at the correction, this correction. So when I check a correction, you know, I'm checking, I want to go, like you heard me, from the 15, I want to check the hour. And when I get to that hour, what's happening? This one started correcting. It started turning around. You see how this candle started getting wicks on both ends coming out of that uptrend? So you definitely want to make sure that you are within that multiple time frame confluence when you, especially after you see an uptrend like this, right? Because this was ridiculous. Not ridiculous in a bad way, like ridiculous profit-wise, ridiculous pip-wise, right? So we have so many people that actually took that trade. This one activated back here, right here. This one activated back here. When I'm checking my multiple time frame confluence, I'm not worried about where the stochastic is, because my analysis was done on that 15-minute chart. That's what I'm looking for. So, and I'm talking about that right now, how many time frames. I'm not looking at many. It's a factor of 4. So if I'm on a 15-minute chart, I jump to the hour, right? And then if I can look at the 5-minute chart for a tighter entry. So I can, right? I can look at that. So what does that tell me? That tells me that my 5-minute chart has already started in its downward movement. It's already started. So the 5-minute feeds into the 15, right? That lower time frame feeds into the higher time frame. And that's what that does. But then my hour is still, you see the momentum of the market, right? We're learning to listen to the market. We're learning to let the market talk to us. And when you see that that actually feeds over into. Now, where a lot of mistakes come in is that with beginners or even people that's been trading for a while, we want to look at one time frame, right? So even with the BYOB cash out, I'm giving you 3, and now once again, it's been back tested, but I'm giving you 3 confirmations And with those 3 confirmations, you can literally take the trade based off those because of what it is. But you hear me saying, even with that, you can still take it to the next level. You want to take it to the next level so you can increase your accuracy. How would you like to know that you're gonna, unless you do something, we're not paying attention, not waiting on a piece or to flip, not doing something like that? How would you like to know that you can increase your profit? Would you like to know you can increase your accuracy? You know, and that's all I'm showing you right now, is that how you can do that. And so that's what that multiple time frame confluence. So even if, let's say I wanted to, if you were trading here from that 5 minute, right? Because some of you guys like to really scalp, you right? And 5 pips, right? From 5 minute, 5 pips. So if I jump to the 30-minute time frame, what's happening? So factor of 4, right? So actually it's a factor of 4 to 6. So with that factor of 4 to 6, because I would get 20 with 4, but with 6 I get 30. So I don't want to be looking at the hour time frame trying to analyze something off the 5. My higher time frame right here is, of course, the 30. And what's happening on the 30? So that's how I know I can grab those pips. So that's you want to look at your multiple time frames. So that's definitely going to help you. It's definitely going to help you. And so that's going to also help you understand the BYOB. I mean, it's definitely going to help you understand and take it to the next level. So now I did mark up the chart so I can kind of show you some things that happen now. But before I get there, before I even go a step further, do we have any questions on what I just shared with you? Any questions? Times 4. It's times 4. It's just, now it's mathematical calculations. That factor of 4 is like times 4. So if I'm on a 1 hour chart, it's like 4 to 6. If I'm on a 1 hour chart, then I want to look at the 4 hour chart. If I'm on a 15-minute chart, then I want to look at the hour chart. I don't want it to be on the 15-minute chart and going for something else. Can we go how you enter your trade? We're getting there. So definitely, because that's that same thing I just showed you let me go back to that. So I just showed you that that's on the 5 minutes. So if I was on a 15-minute chart and we're analyzing this, right? And you guys are looking for a trade, okay? And you wanted to grab a trade, you wanted to take a look and grab a trade. So what I'm gonna look at the hour and what's happening on the hour. I got wicks on this candle is changing, and I got wicks on both ends. So I know that it's gearing up and it's coming into a sell. So that's why you guys were able to take this sell. I know a lot of people took this sell earlier when I actually caught back up and looked at the chat. So, Mr. Rogers, you unmuted. You got some comments you want to ask?
Yeah, I wanted to make sure that people understand what we're sharing with you tonight is taking you from the basic strategy. So you're going to still apply the rules, but this is how you increase your accuracy and your higher profit margin. So you're going to always make sure that you apply the 3 confirmations. But the purpose of tonight is to understand how you can take this strategy, no matter what your trading style is, and you can go from scalping to the time frames. And what we're doing is just giving you additional confirmations on the higher time frame based on your trading style. So I want to be clear that you understand this is we're taking your accuracy and your profitability to a higher level. So no matter where you are, you can always scalp it. But then if you want to see that same trade, because now you know that you're going to experience the pullback, you're able to see it, and then that allows you to stay in that trade longer because you're preparing yourself for the pullback, the correction, but then you're going to also prepare yourself for the continuation, and you're able to see that on the higher time frames.
Exactly. And hold that question on the stochastic, and I'm not answer your question. If I don't answer your question in a few minutes, then ask me again, because I want to make sure that you understand, because you'll see the stochastic is the momentum with this time frame. That's the momentum with this time frame. And so that's why I'm saying hold that question for just a minute, because I'm about to show you and you will actually begin to see. Because what I did is I took the same exact thing that we just marked, the same trade that we took today, and I marked it up, right? Did the same trade and I marked it up. And so hold that question for just 1 minute, and I guarantee I'll answer it. But if I don't, Ask me again. Yes, the same thing happening on those time frames. That's exactly what I mean. So that's exactly what I mean. So now this is to help gear you and guide you toward understanding multiple time frame confluences to help you understand, how do I trade on higher time frames? How do I take my trading style to another level, right? How do I do that? Because everybody's not a scalper. Everybody's not a scalper. That's just reality. And some people don't want to do more than 10 pips in one trade. Some people want to do 10 pips, right? Some people want to do just one trade. Like, you could have just cashed out. If your daily pip goal was 100 pips, then just on this one trade today, you actually could have gotten that, where it could have actually had to take you 10 trades to get to the same thing. So you can start intraday trading, because this works on all of that. But what I'm sharing that with you for is for you to understand that, yes, the 3 rules are there and the 3 confirmations. When that flipped, right? When it flipped, you literally could have just gotten into that trade. We could have just gotten into that trade. But did you get into that trade? Right. So if you notice, right, I need to make this smaller. If you notice that this goes all the way back to the 11, look at how long this has been in an uptrend. We had some consolidation right here, but look how long that's actually been in an uptrend. And this is what happened today. So look at how long this currency pair has been in an uptrend. I'm not ignoring the other confirmations. If I'm trading on the 15-minute chart, then I do my analysis on the 15-minute chart. The only reason I jump a time frame, I go forward a time frame, is to see what's happening on that chart, on that time frame. And when I drop below, it's to get a tighter entry. I don't want to analyze anything on those other time frames, because you notice that the stochastic moves with those time frames. Matter of fact, let me start with the stochastic. Let me start there. So if I'm on the hour, I just lost it. If I'm on the hour time frame, right? I mean, it's actually the 4 hour. So I'm on a 4 hour time frame. And you notice that I've been in a nice little uptrend, right? I've been in an uptrend. So you notice that, why is this not pushing back? I got on my hour, I need to be on the hour. Hold on. So this is something you would have looked at trading, right? This is something you would have looked at trading. So once again, this is a support and resistance line, right? This support and resistance line. And with that support and resistance line, I'm on the hour chart. I'm on the hour chart, right? I'm on the hour chart. And let me wait on this to go away. I'm on the hour chart. So you notice that this has been in a consistent uptrend. And it got to this resistance line, right? It got to this resistance line and it bounced off of that resistance line. It came back up, it tested it, it bounced back off. So you notice that on this time frame, my stochastic moves with the momentum of this time frame. So if I'm analyzing off of this time frame, you see I got a downtrend, I got an uptrend, I got a downtrend. So if I'm analyzing off of this time frame, then what I'm looking for is this. I'm analyzing this time frame and this time frame alone. But you notice it's bouncing off of there. And it's bouncing, and then if I come to the 4 hour chart in that same area, right? On that 4 hour chart in that same area, I'm still in a buy. So, but look, this is that momentum, and my stochastic was doing the exact same thing as the arrows that I drew. Look how that looks different on the 4 hour chart. That looks different, but that's still happening on the 1 hour chart. And so but look at my stochastic here. My stochastic is like flatline, because it appears that it's something else going on that higher time frame, on the lower time frame. On the lower time frame, it's something else going on that lower time frame. So no, I'm not analyzing my stochastic on every time frame. I'm analyzing on the time frame I'm trading off of. So if I'm trading off of the 1 hour, right? I'm trading off of the 1 hour. Now on this 1 hour time frame, look at what's happening. You have a sell, then you turn around, you got to buy, and then I turn around, I got to sell, and then I turn around and I got to buy, right? And you see the momentum and you see what's happening, okay? You see the momentum of what's happening. Now, my 4 hour is ultimately in a buy, but this is the pullback. We just saw what's happening. So when we talk about we got market pullback or market correction, right? We got pullback or correction. That's that pullback because I got a strong, oh, you're welcome. You got a strong force pulling on that lower time frame. So when you see these candles, right, it doesn't look like that on a higher time frame. But when you see this is what pullback is. So the momentum, so no, I'm not, my stochastic is just moving sideways because it's a lot going on, and then it's gonna push through, right? It's gonna end up pushing through that support line, I'm sorry, the resistance line. It's gonna end up pushing through that one, right? And so, and that's fine. You go back and watch this video. Of course, we'll talk about this more than once, but that's why we're doing this, is I just want you all to understand.
So
And
real quick, everything is energy and words. So she's not confused. She just needs better clarity. So I want you to have that as your affirmation. You're not confused. You just need to get better clarity. So let that be your affirmation. And my mind is ready to receive this information so I can execute. Everything has to be understanding that energy. So no one is confused. We're just here to give you better clarity so that you can execute more effectively.
awesome. There we go. You need better clarity. And so this is just something that this might take more than one session to digest. It might, and I'm okay with that. And that's why we've been building up to it. So I'll go back to that, but that's why we've been building up to it. So if you notice, but I really want for those, and we'll do this, we'll do it as long as we need to on Tuesday nights. We definitely will. So, but you notice that when this market went up, so it pushed through there and we continued our uptrend, right? Now, if I drop down, let's focus on this area still. If I drop down to the 15-minute chart, you want to understand what you really want to get clarity on and understand is that these time frames work together. And so when I say drop down to the lower time frame, they feed into each other. So if I'm dropping down to the lower time frame to get a tighter entry, right? To get a tighter entry, now look at what's happening on here. This is that same thing that happened on the hour, okay? And now look what's happening on the 15-minute. So I use the hour to analyze. You just saw me use the hour to analyze. I jumped to the 4 hour to get the big picture of what's happening. And then you come down to the 15-minute for a tighter entry. So if I was taking a sale here, right? This is how you end up, even if I'm doing it, if I start my tighter entry on that 15-minute chart, right? No, this is, I didn't use the web analyzer call a trade. This has been in a buy for a minute. So this has been in a buy for a minute, and I'll come back to that in just a moment. So also, well, no, let me answer that now. So what the web analyzer does is the web analyzer gives you what's called an entry trigger. It gives you an entry trigger. That's not a signal to the point of this is where I entered a trade for a sale or this is where I entered a trade for a buy. The web analyzer scans the market, it analyzes, and it gives you that entry trigger based on, and you have to apply that based on areas of value. So just because something is triggered at that moment does not mean that I entered a trade at that moment. So we do use the web analyzer, and it's a great tool. As you can see, I can't pull anything up right now, and that's okay because I would actually pull back and try to show you. However, using that, it gives me that entry trigger. Now with the BYOB Cashout, you can actually trade corrections. You can trade the direction. You can trade. I just showed how we traded a correction. So the web analyzer is going to give us that, but then what it does is when it gives us a trade idea or a trade suggestion, it opens the door for us to take that analysis to the next level, because now I can say, oh, I got multiple trade opportunities. I mean, it might have triggered this, but look at all of the trade opportunities that you had, right? Just based on that. So if I'm looking at this, you know, if based on what time frame you started on, whether you were on the hour or if you were on the 15-minute where you started from. But if I re-entered, I mean, that's 51 pips there. Then I come down and that would have been another 50 something pips. And then I would come back and then I got another 60 something pips. And then I come back and I got another 90 pips, right? So it's so much money in this. Or you could just stay on the 4-hour chart and just ride it up. So for example, when we trade the US 30, right, you get those US 30 calls, and those are those US 30s. And when you get the US 30, what happens is, like, those are called on the higher time frames. And so you see, you just riding it up, and then we get a little pullback and you riding it up. So that's how I can go back to the lower time frame and I say, go scalp it. So this is no different. This is the same thing. This where you just would have been riding this from way back here and pulling up. So I'm giving examples of past happenings, right? The flat tops, the mid level. Because you're gonna analyze it. Because how do you know what the future holds? Because you listen to the market. The market talks to you, right? The market talks to you. So the market talks to you. So that's the purpose of, if you have not traded at all, or if you're trading, then what you're looking for is allow the market to talk to you and listen to the confirmations. What I'm showing you right now is how the market reacts and what the market does. So how you know how to read the market, because this is not gambling, it's not guessing, it's not any of that. What this is you listening to what the market is telling you. And if you're still learning how to listen to the market, then do the 3 confirmations and cash out, grab your 10 pips and cash out. But in your demo account, you can start trying to take it to another level to get more, like how I just showed you. In this, does this look like 50 pips either direction, right? It doesn't look like 50 pips in either direction. But when I drop to the lower time frames, it is. But you want to be able to see, you want to be able to know, just like, okay, this is consolidation, right? This was consolidation, but look at this uptrend. I want to show you something. Yeah, exactly. Be in tune with the market. Listen to the market. The market talks to you. It's just like a relationship. If you're in a relationship with someone and they're talking, are you being quiet to respond, or are you actually hearing what they're saying? So if you're actually hearing what they're saying, then you have to pause. You have to, get yourself in the right mindset. You have to play with the charts. And then you actually hear what the market is telling you. Or are you listening to respond? When I say listening to respond, are you forcing a trade? Are you trying to make it work? Are you trying to push it to where, hey, I got this and I'm gonna take this trade? And then you're sitting there talking about some, come on, let's go. No. Turn around. We don't want that. What you want is for you to be able to understand what the market is telling you, because we cannot trade emotion. Exactly. You do not want it to play with your emotions. So now right here, we got a nice uptrend. And so I put this line here to kind of show you. So we got an arrow here, and this is a nice uptrend, right? This is an uptrend. Now watch this. Of course, I got to go back and find it. So you ever wonder why, right? You ever wonder why I'm on our chart? See how it came back? Now look, my stochastic started coming down like it wanted to flip down. And you see how it's pushing on top of that support line? Why won't it break that support line? Is it going to break the support line? Is it going to go through? What's going to happen? Well, guess what? I don't have to guess. You can actually know. If I go to that higher time frame, right? Look what the market is doing. On a 4-hour chart, it's in a strong uptrend. Look how strong this is, right? It broke through on the 4-hour chart in that candle, and now it's pushing through. And that's why I have those arrows there. So all of these time frames talk to each other. They feed into each other. So if I got a strong uptrend on this 4-hour chart, it's not coming through on the hour. It's not breaking through. So I know it's going to continue to push up. What's happening right here, right? My hour is in, how do we know what's going to happen? My hour is in, my stochastic cross, and it look like it's trying to push. but it's sitting on a support line. What's happening at the 4 hour? What's happening at my 4 hour? So not until this will push when this finishes. When this finishes doing what it's doing, it'll push, right? It'll push. And so these are the things you just want to start looking at. You see how it's tap dancing on that support line? It's not going through there. And why is that? Where'd it go? I'm sorry if I'm making y'all dizzy. Sorry, making myself dizzy too. So on the 4 hour, look at where this is. It's right here. So it's not going through there. And I'm gonna actually put a circle there. And like I said, we'll go over this again next Tuesday. We'll keep doing it, right? And this is just the method behind the madness of the market, right? There's no reason why we should ever be guessing on trading. There's no reason why. So I drop down to that hour, get in my circle, and look what's happening, right? That's the hour. Now what's happening on my 15-minute chart, right? And on a 15-minute chart, you'll be like, oh, the market's in consolidation, or the market's moving sideways, because look at all my look at all my little candles with all those little nice little wicks on them. It's like market indecision. And so that's what you're looking at. You're like, is it gonna go down? Is it gonna push? Why won't it push through that? You know, look at the higher time frames and they'll tell you what's happening. They'll tell you what's going on. So remember, each time frame feeds into the next time frame. And this is what I mean on the morning calls when I'm telling you that we're looking at that currency strength. That feeds this. I mean, that reads what we're talking about. So the currency strength is based off of what we're talking about and not vice versa. So if you can understand this, then you already know the strength. That's why I use the currency strength to understand what the market's doing so we know what to go trade. So if I see GBP this strong, oh my goodness, guess what? Let's go trade it. Let's go trade it, right? And so as you can see, this is where that consolidation started on the matter of fact, look, it's in consolidation right here. Look at that consolidation on the lower time frame. Pull up, you got some consolidation on the higher time frame, right? Look at how it feeds. It's all doing the same thing. And then it comes out of here and, right, and that's that consolidation. So it's all happening. Everything on the smaller time frame feeds into the higher time frame. Analyzing on the 15, right, so on the 15-minute chart, if I'm trading the 15-minute chart and I can use the 5-minute chart for a tighter entry. So absolutely, you sure can. But understand, if you do that, right, you're going to have some pullback, right? That's why I haven't really done it on the call, because we hadn't really covered that. Like when we're trading, I haven't really done it. I call it my rollover pips. So I'll make up a name in a heartbeat for you, so understand. But I will call it my rollover pips, because if I'm on a 5-minute chart and I'm looking, let's see, let's find the entry point, right? Because these pips are going to roll over into the next time frame. So if I would have been trying to enter right here, right? Okay, and you see that you get a tighter entry here on the 5-minute chart. So this actually happened. Look at, so on the 5-minute chart, actually, this one actually, y'all did it around the same time because it was a little consolidated, but this is technically where some of that started. But you can get a tighter entry here and you could have rolled it out. So you can actually use the lower time frames to enter faster. Now, one thing I'm going to tell you, and I'm going to advise you, like we're talking about that stop loss, so you'd be trying to put it right here because you're going to get pullback, just like what we're talking about on those higher time frames. You will get pullback. You will get pullback. So you want to make sure you cushion, you give it some cushion, and you do your stop loss as if you would have been on this on a higher time frame, because I'm gonna put this at the top of that PSAR. Now, when I drop down, right, you would have put your stop loss right here, but the PSAR actually was up here. So you want to give yourself some cushion on, and I put it at the top of the PSAR, so technically you would have had to put it a little bit above that. So that's what I mean about you want to give yourself some cushion for that flip, because when it flips, right, sometimes when it flips, it'll actually come up and you'll see that that PSAR or that candle might have a wick on it or something that will actually hit in between here. So if I'm on that 5-minute time frame to answer your question, I'm gonna put this at the, I'm gonna put it on the 5-minute one. So the tip is right there on the 5-minute one, right? Dead on that one. When it got to the 15, okay, hold on. So when it got to the 15, guess what just happened? Remember, my PSAR, my arrow is directly on top of at the point of the PSAR. The point of that candle, that arrow, not candle, the point of that arrow is at the dot, the very top of the PSAR on the 5-minute chart. So when it rolled over into the 15-minute chart, what just happened to your trade? You just got knocked out of the trade. You just got popped out. So you want to give yourself cushion. If you're doing a tighter entry, you definitely want to cushion that stop loss just a little bit. So now what happened today? We got a few minutes left, and please write your questions down, because I know you're gonna have some. Go back and watch this video. Write your questions down, because next Tuesday, so yes, this week you need to be cashing out, but next Tuesday I will answer all your questions pertaining to what we're going over today. But I do want to make sure I have time to cover me being on a 1-hour chart real quick, because we went over a lot today, a lot. So rewatch this video, write your questions down, and let's get them answered. So we got a flip. Of course we will. We got a flip, right? We got now. I remember I told you it's always around. Now we've already done further analysis. My stochastic should be around the 20. We've done further analysis, so we know for a fact the market is in a significant uptrend, right? So this is okay. So let me, before anybody asks me that question. So now here is I got my green candle with a flat bottom. I got my PSAR flip. However, I want to check my next time frame. I want to check my higher time frame. This is what I mean. So just so we kind of stay here, let me circle this for you. So I want to check my 4-hour right there, right? Actually, I'm gonna just take this line. I'm gonna do it this way. This is where it lined up, right? So I'm gonna go to my 4-hour. When I go to my 4-hour, what do you see? I see a nice little uptrend, right? You see a nice uptrend that's happening, because this is where that momentum actually started. And so I'm on the hour. Now, if I wanted to drop down to the 15-minute for a tighter entry, I can actually do the 30-minute, drop down to the 30-minute for a tighter entry, right? You can actually do that. Now, look, my momentum started way back here, but it was in consolidation. But remember, I'm not reanalyzing, I'm just looking for a tighter entry. So this confirms that I can actually enter, right? It confirms that I can enter. I'm looking at the 4-hour just to make sure that I got confluence. And then what I do is I set my support and resistance lines, right? Come back, I do my support and resistance lines, and that's how we rolled this trade out. That's how we knew where to enter, because let's say they were going in 2 different directions. I'm not trading that, right? Because that's what's happening right now, right? You look at, I don't want that trade. I don't want that trade. So right now, look, the 1-hour is in a sell, or is thinking it's in a sell. And my 4-hour is still in a buy. It's in a strong buy. Look at these candles. So my 4-hour is still in a strong buy. So, and this candle just got here. So what do you think is happening? When this hour figure out what it want to do, and you see it's not pushing through. Now, when it figures out what it want to do, or that 4-hour will it turn around? Like, is that PSAR gearing up toward that one? So, but you want to make sure that, you just want to make sure that the overall picture of the market is in confluence and what it's doing. Because right now, we know that it's not pushing through, and it's not going to push through. It's going to go on based on what this 4-hour is doing as well. Now, I'm, of course, just speculating, but look at how strong it is on the daily chart. Now, you don't have to jump all the way there, but I'm just showing you the strength of the market, right? So When you see something like that, remember I told you how you can sit back with confidence and be comfortable that, oh, let me grab 100 pips real quick, or oh, let me grab 50 pips real quick. That's how you do it. Do that multiple time frame confluence, like that multiple time frame. And so that's why today, this was our trade. This is our trade. On the call this morning, we jumped to the 4 hour, saw that we have a trend, went down to the 30-minute chart for a tighter entry, set our support and resistance lines, which you see all these nice little yellow lines on here, right? Now, of course, you all know that when I do my support and resistance, I take my support and resistance and I change it to a line. And it helps you identify, when you change it to a line, it just helps you identify those pieces. So I don't want nobody struggling. You change it to a line, help draw your support and resistance. And what is my take profits? Your take profits is take profit 1, 2, 3, right? So everybody should have hit 1, 2, 3. And that's how we got 114 pips today. So if you notice that I'm not on the web analyzer right now. Everything I do is on the web analyzer. The web analyzer will not hold your lines. So I actually pulled up my TradingView account to mark this up for you all. Now, and I'm gonna reiterate, you want the web analyzer because if you're trying to look at trades off of TradingView, you will learn the hard way that some of them have a delay. Some of them have a delay unless you have a paid account. So you want to spend the money to get the web analyzer. But if I want to mark up my charts and hold it, then that's why I'm on TradingView. TradingView. So ladies and gentlemen, if this call was helpful, let me get a 555 in the chat. And while you're putting that 555 in the chat, because we're all going to cash out and we're all going to grab more pips, and we're going to be we'll be trading off that hour. So you'll begin to understand what this call was all about, because we will not just only be doing a 15-minute chart, right? We will actually be trading on other time frames as well. So I'm a master trader. All my trades end in profit, and I'm going to turn this call over to Mr. Rogers.
Wow, thank you so much, Trade Whisperer. Folks, I am jacked out of my mind from the front to the back. Man, let me tell you, if you feel like you are really absorbing this information, if you feel like you're liberated, that you really know that you now really have the ability to be your own bank, I need you to put a 777 in the chat. If you are feeling this, that you can go into the market and take as much revenue to your household as you choose to, because I just want to shout out to the Trade Whisperer herself. It's just amazing that the gift that God has given her to be able to just disseminate this information in this simple and this simply digested form, just to see her help you understand how you can go from time frame to time frame. For real, if y'all really excited about your life, please put a 555 in the chat if you are excited about that. I just cannot contain myself. Where we know what's about to take place, folks, we will impact and empower and financially educate 1 million families. Our whole mantra is simply with this: we want to teach you how to become the signal. Yes, we're going to always at some point get back to sending out, but if that never happens, it is such a wonderful feeling to know that you are so empowered, and now, most important, you now have the ability to go replicate and duplicate this process in your community, your place of fellowship, your sphere of influence, and you're now able to write your own financial legacy. So with that being said, folks, we want to transition this call to a gentleman who I have the